Yeah, I think gold's kind of interesting now. We had the pretty big moves in 2020, as you can see there. If you look at the the left side of the chart, we had some pretty big moves. Then part of this year, we had that big move down, but we've been consolidating lately. And so we've formed a pennant. And so we've got a tops line that comes in at about 1,880 and a bottoms line that comes in at 1,000, roughly about 1,750. And normally when this happens, the price action builds up energy as we go into that little corner of the pennant as we're starting to do now. And then when the breakout happens, it's usually quite big. And I personally think that there's more chance of a topside breakout, the way the formation looks to me, and also too on fundamentals. I think that inflation probably is a little bit stickier than some of the central banks think, and gold is, of course, is a good hedge for that. With interest rates so low around the world, gold has some attraction. So I think portfolio managers will be looking to buy dips still. However, if we go through that 1,750 level and break pretty hard, then we could go to significantly lower levels. Why don't we move to the next chart, which is also a gold chart? Just one second. I'll get that up. And this is a short-term. This is also this is a daily as opposed to a weekly, and it tells a very similar story. So we've got that low that we've bounced off at 1,749. We'll call it 1,750. We're consolidating here right around that 50% retracement of the 1,916, 1,749 move. I think if we get above the 61.8 Fibonacci retracement, which comes in at 1,852, and then follow that up with the break of 1,880, I think then we could go quite significantly higher. I'm thinking more, high 1,900s and maybe even go towards that 2,000 mark if we do break that level. On the downside, same story. If we break below 1,749 or 1,750, we'll probably drift all the way down to just above 1,600. So coming to an interesting point there, and I think we'll have some resolution fairly shortly.